Okay, now let's look at supply and demand zones on the charts. Supply and demand zones on the charts. So I have taken the liberty to draw out some supply and demand zones previously, like, so let's just go into it. So supply and demand zones, what we look at is a place where there's like plenty candlestick shadows. Plenty candlestick shadows. When we see candlestick shadows, you can see that there is a lot of other manifestation going on around there. You get, so look at this zone here, for example. So what we use is this whole area here, this whole area of accumulation, or is it distribution in this case? So price goes up into that place, does this distribution is like a preparation to sell. So they accumulate, sell orders, and then the price moves lower. And then later on, we see price go through the zone. First of all, we have a little bit of resistance getting into the zone, and then finally smash through it. But before we get this high, the price actually comes back to test it. So this was a supply zone as price goes below it, but as it smashed through it, it becomes a demand zone. So it's just like classic resistance turn support. So as price goes through it, the price comes down, test it, and if you had been a buyer around maybe at this candle close, say at this candle close, it gets like let's say, let me just say to the body here. That's 153 pips, and then your stop loss would be maybe at the zone 51 pips. So this is one example of supply and demand. So there are many more. You can see here price does some consolidation in this area, so we mark that out. So price goes down, test it, goes down again, test it, goes down again. So this is quite a strong this was quite a strong what is it called? This is a supply zone. Yeah, it was quite a strong supply zone because price, let's say it once, refused to go above it. Let's say it again, refused to go above. Let's say the third time, refused to go above before it finally went through it. So this is another example. And then you can see here too, I just picked out this area. You can see a lot of distribution going on here. A lot of it, a lot of other execution, and then price goes lower. So when we see price going up again, we can use this area as a reference point. Can use that area as a reference point, and then price hits it and goes up rather aggressively. You see that? So here too, I use the wick of this long candle, and you can see touches it once, goes, touches it another time, goes again. So supply and demand zones can be very powerful, but you have to know what you are looking for. Just like every other thing in forex, you can't just be looking for supply and demand zones. You can't just be looking for random supply and demand zones. Exactly what I want to say. You can't just be looking for random supply and demand zones. You have to be a sniper and pick your entries selectively. So I certainly want to show you guys for like an example of how you can selectively pick your supply and demand zones. Aha, here it is, here it is, here it is. So looking at this area, this section of price action, this section, we have price hitting this this major zone here. You can see it's quite a nice zone as price had a very strong reaction towards it and away from it. So it can be a very nice reference point. AED card has actually broken out of it right now. So you can either look for buys, or it may you may smash it, and they would be looking to go on the other side of the call, maybe down to this area or something. But that's not what I'm actually trying to explain now. What I'm trying to draw your attention to is how you need to be selective with your supply and demand zone. So supply and demand zones, you have to look for other factors that are going to back up an entry at that supply and demand zone. So typically, when I use supply and demand zones, I usually enter on candlestick confirmation. So if I see an engulfing candle outside this, which means that they are not willing to go through it, or I see a pin bar or a reversal signal, yes, so I can use that and then find other things to back up my entry. So now what I want to show you, that's what I want to show you. We see a strong price reaction out of here. This long candlestick, that's about how many pip move? That's a 550 560 pip move. So and then after price did that, after price did this swing lower, after price did that swing lower, we now have price retracing. Price retraced higher, price retraced higher. So now what I can do here is, okay, now we have a swing on the short side where we sell swing and it's very aggressive, and now we are retracing. So where are we going to retrace to? We can use supply and demand zones as part of our entry. Now you can see this supply zone here. I drew and price hit it perfectly and it went down. But then this is not the only supply zone. Supply zone I could have used. There's this one here, and another one here, and that one here. So how do you pick? You find other factors that will help you say, okay, this is the most likely one, right? So I can pick out my Fibonacci retracement tool, for example. Fibonacci retracement tool is just to see how far a retracement may go. I will talk more about this later when we get towards Elliott wave. So I can pick that and then place it from the top to the bottom of that price swing, and then I'll be looking, okay, where is it most likely to retrace to? And typically I like to buy or sell at deep retracement. So let's say this area right here is where I'll see as a sweet area for me to sell from. This thing is doing the magnet mode. Okay, so this area right here, so let me just delete the Fibonacci tool. So I've determined that this is the area I want to sell at, this little box. So then I see a supply zone here, and you see price gets to that place and rejects a little bit. But then I want to draw your attention to something. This place right here, you can see one high here and that high here. This is what we call a double top formation. So in retail trading, a double top is a structure that we use to sell. It's a sell structure. So when price makes a high, a short term or all-time high, and then it goes back to that area, we're looking for sell signals. So here it does go away. But the thing is that as people sell from double tops, they usually put their stop loss just behind that double top. They grab. So they put their stop loss maybe above here. So this would be most people's stop loss. Let me put like a trend line there. So let's say some people put their stop loss just here. That red line. As a people's stop loss would be. So the banks are now looking for people's stop loss. So they are usually going to look for those stop losses that are above the double tops. So when price goes up this place, I'm not looking to start selling there. I'm seeing these double tops, and I know that these people would like to take the stop losses that are there, and they have not gotten there yet. So that's why I decided to choose the supply zone that is in this area, because if they get to the supply zone in this area, then they will have taken those stop losses already, and then there will be liquidity in the market again for them to keep moving lower. So you can see, first of all, I used my Fibonacci, then I used the double top and my understanding that the market makers would like to hunt people's stop loss or buy stops, you get. So and I now picked a supply zone that is now around that area that would justify my entry. So an entry here will be very, very nice. Imagine if we entered here. Just look at that payout. 364 pips. Down here is 461 pips, and so on and so forth. So this is an example of how you should use supply and demand zones selectively. So don't just jump in. So I'll be going through so many things I can add to your trading strategy, your trading criteria that I can easily use like this. For example, you see here I've inputted my supplies and I've put in Fibonacci, I've put in double top buy stop hunts and things like that. So we're going through more of this. We'll be going through more of this. So I want to end this video here. This is the video for supply and demand zone. So I want you guys to go into your chat and look for supply and demand zone. And I'll also be dropping out that video showing you the different ways that people draw out their supply and demand zone. There are 3 different ways. So I'll be checking about that later too. See you next time.